Before we get into Chapter 5, I want to step back just a moment and look at checking accounts once again. At the very end of Chapter 4, we dealt a little bit with something called reconciliation, which means, as you should know by now, bringing your bank statement and your checkbook balance into balance to make those two equal. And we'll talk a little bit more because this is a very important process. You need to understand how this works. So on your screen, you see some information, and after we go through this video, there will be some questions for you to answer. First of all, you will receive, if you have a checking account, you will receive a bank statement typically about the third week of the month. Typically, these are done monthly, and typically they are done electronically now, although they could be sent to you by mail and could be in paper form. But more often than not, you'll get an email notice from your bank that the bank statement is available online. So let's assume that that happens. This is today, let's say it's October 28th, 2019, and you receive a bank statement from your bank for your checking account. And over here you see that the bank statement, we don't actually have the bank statement in front of us, but the bank statement itself is dated October 18th. And we just now are getting around to reconciling here. But their date was October 18th. And according to the bank, you have an ending balance on that date of $830. In your checkbook, and it's shown over here, the bank statement shows a balance of $830. Your checkbook, however, shows a balance of $400. And the thing you do not want to do is just assume here that you have $830 available for you and change your checkbook to reflect that. That's probably not the case, as we'll see. Probably both of those numbers are not accurate, and we'll see why in a moment. So what we will find also on the bank statement will be a list of checks that have been cleared. A cleared check means that that is a check that you wrote, sent to a person or a company, they cashed it, and now your bank is aware of it. They took money out of your account to handle that check. So they list all the checks that have been cleared, and there may be a lot of them, depending on how often you use your checking account. Could be 15 or 20 of them. So you want to match them up. You look at each one of them, and they are listed typically by date and by check number, and you compare those checks on the bank statement with the checks in your checkbook. So you have check number 801, for example. It shows on the bank statement, and it shows also in the checkbook, so that has been cleared, so that's not a problem. The bank knows about it. You've already recorded it in your checkbook. But when you get done looking at all of those checks, excuse me, we will assume there are 3 missing. Again, look over on the left side for this information, and I've listed some checks that you wrote and you recorded in the check register of your checkbook, but they're not on the bank statement. There are 3 of them. Now, why would that be? Well, let's look at one. October 12th, 2019, you wrote a check number 308 to the Delphos Canal Museum for $100. Being a good citizen of Delphos, you donated to the museum. However, that check is not listed on the bank statement because, very likely because the museum has not yet cashed it. They have it and they're waiting for some reason, but they have not cashed your check yet, so the bank doesn't know about it. So that's called an outstanding check. There are 2 more. October 21, you wrote check 319 to the local flower shop, $15. October 26, check number 320 to the Allen County Electric Company for $170. And those 2 are also not on the bank statement. Now you wrote them and you sent them and you have them in your checkbook, but the bank does not list them. Well, for obvious reason. The bank statement was compiled on October 18th. These 2 checks were written after October 18th. So they are outstanding, as is check number 308. So your first task is to subtract outstanding checks. The first one was $100. Second one was $15. Third one was $170. And the parentheses indicate negative numbers in my Excel spreadsheet here that I'm using. So these are outstanding checks. and they will be cashed. The bank will eventually take money out of your account, so we need to subtract as part of our reconciliation process. There could also be, excuse me, an outstanding deposit. Now let's look over here on the left again. These are deposits that you made and you recorded them in your checkbook, but they're not on the bank statement. And again, the reason is you made this deposit on October 21. You deposited $50 into your checking account. You put it into your checkbook. You added it into your checkbook, but the bank doesn't know it yet. So at least they didn't know it as of October 18th. So we need to add this outstanding deposit because that will increase your account balance. And now we can find the adjusted bank balance. And again, I'm using Excel, and I can use this little function at the very top, auto sum. And if I do this and hit return, there's my total. So the bank now is adjusted. The bank balance is adjusted. It says 595, and that doesn't equal 400 either, so we're not done yet. But that's the bank statement part of it. On the left, more information. Excuse me. There are some bank fees typical with checking accounts. You may have a monthly fee. In this case, it's $5. Excuse me. For the privilege of maintaining that checking account with the bank. There could also be another fee when you need to buy new checks, for example. If you run out of checks, you may order them perhaps through the bank, and they will charge your account. So this is a bank fee that is shown on the bank statement. That will be there someplace on the bank statement, but it's not in your checkbook, so you need to put it in your checkbook. So this is indicated over here, subtract bank fees. So we'll subtract the $5 from the 400, and then there may be outstanding deposits. Let's look over here at the very end. Deposits shown on the bank statement but are not in your checkbook. These may be a bit unusual, but in this case, let's assume you have a job and your employer pays you with a direct deposit. They send the money, they send your pay directly to your bank, and your bank puts it into your checking account. So they have that, they show that on the bank statement, but for whatever reason you forgot, perhaps you didn't put it in your checkbook. So this on the bank statement says on October 18th, there was a direct deposit of your paycheck, $200. And as I said, for some reason it's not in your checkbook, but we want to put it in there, obviously. So we'll do that now. Add outstanding deposits of $200. And now we're ready to look at a total for your checkbook. And again, I'll use my auto sum function and hit return. And there's the adjusted checkbook balance. So these two adjusted balances above should equal, and they do. So the bank says you have, after adjustments, $595. Your checkbook says, after adjustments, you have $595. So you have reconciled the two. If they don't balance, then you need to find out what's going on. So this needs to be done every month. Every time you get a bank statement, you should do this to make sure that your checkbook agrees with the bank. So as with other videos, you can pause this, you can go back and listen to it again if you need to, but it's important that you understand how this works. And again, you may see this coming up later on in a test or a quiz, so make sure you understand this whole process of reconciling your checkbook with the bank statement. At this point, let's go back to the course page. There may be some questions for you to answer.